Hey guys, hope you're doing well out there. Time to take a look at shares of Google, which are down nearly 6% in the after hours after reporting their Q4 2023 results. We'll get into the revenues, the earnings, take a look at the financials and the all-important Google Cloud segment, and then we'll take a look at it from a chart perspective. This one is making a natural pullback, just like a lot of big tech earnings was coming into the earnings season, setting up at all-time highs, and I think this natural pullback should be expected. We'll outline some levels where I think you can come in and be a buyer in shares of Google. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Google trading down close to $144 a share in the after hours, down nearly 5.75%. Now revenues coming in at $86.3 billion. That was good for 13.5% growth year over year. That beat Wall Street expectations by right about $1 billion. And then on that GAAP EPS figure coming in at $1.64, that was a slight beat of just 4 cents. Now, Google net sales by category, so the all-important Google search and basically advertising coming in with 12.7% growth year over year. YouTube ads actually surprisingly strong, coming in at 15.6% year over year. YouTube ads had been struggling really throughout 2023, and now seeing it pick back up in the Q4 is certainly a good sign for Google. And then the all-important Google Cloud segment coming in at $9.2 billion. That is good for 25.5% growth year over year. On the cloud side, that is actually, again, surprisingly strong growth. The reason Google shares are likely getting dragged down in the after hours is due to a slight miss on that advertising revenue. And so expectations were at $65.8 billion. Google coming in just shy at $65.5 billion. Not a huge miss, but I think advertising is Google's biggest driver, and I think investors are still wanting to see Google advertising continue to be extremely strong, and likely this advertising miss will sort of carry on tomorrow to other names like a Meta, like even a Pinterest and Snapchat, which have a bit more advertising exposure. And so Google CEO saying, "We are pleased with the ongoing strength in search and the contribution from YouTube and cloud." And then he says that each of these are already benefiting from their investments into AI and innovation. And as they enter the Gemini era, the best is yet to come over at Google. Certainly, I think investors are hoping for that. And the CEO doing some cost cuts over on their operating side is also helping that out. I think investors really wanting to see Google have sort of its meta moment in 2024. Now, from an operating perspective, the segment, again, revenues coming in pretty solid, beating on most ends. Advertising revenue coming in at 65.5, just shy of the 65.8 estimate on Wall Street. Google Cloud coming in at 9.2. Now, from an operating income perspective, Google Cloud turning positive in the Q4 from an operating income close to $860 million. Last year, you were losing nearly $200 million on that Google Cloud business. And so still not very high margin on $9.2 billion of revenues. You're just squeezing out roughly $860 million in operating income. But I think Google Cloud is still in the infancy of turning profitable. This one has the ability to really scale up. But again, you don't want to fall behind competitors like in Azure, like in AWS. Certainly Google is in third place behind those two. We just saw Azure growing still at 30% and Google Cloud just growing at 25.5%, still being overshadowed by growth in Azure. Google Services, which is their ad business, continuing to chug along, continuing to be the bread and butter and really drive profitability over at this business. They are still losing money on their other bets, although the loss is shrinking. Last year, you were at $1.2 billion in operating loss on the other bets. Now you're just at $860 million. I actually don't think this unit will turn profitable anytime soon. I don't think that's the aim over at Google. This is really their experimentation area where they kind of just look to hit home runs and look to discover new innovations. And so other bets, I won't be surprised if this continues to kind of stick around and lose money for a little while. I think that's not really a focus over at Google. The other important thing is the number of employees ending 2022 with roughly 190,000. Now that figure is down to 182.5 thousand. And so in this quarter, even Google taking a fair amount of charge due to severance and then also cutting lease spaces on their offices. So Google really trying to control its costs, control its employee headcount, and really make its business more efficient from an operating perspective. And you really see revenues aren't really affected by that, up from $76 billion now up to $86.3 billion. And your costs didn't really move all too much, at least not as fast as your revenues. Costs and expenses rising roughly $5 billion, whereas your revenues climbing close to $10 billion. And so your net income coming in at $20.6 billion. That is for 3 months. For the full year, net income coming in at $73.7 billion off of $300 billion worth of revenue. In this most recent quarter, their cost and expenses not really moving all too much. You see R&D up roughly $2 billion, but then sales and marketing not moving up all too much. And then G&A also just fractionally up $200 million. And so that is ultimately helping Google's bottom line stay more lean, stay more efficient. And I think that is expected to continue into 2024 as they essentially get their business to be in a much more efficient place. Now, from a cash flow perspective, this business is chugging right along. You have that $20.6 billion worth of net income again for 3 months, and then that turns into roughly $18.9 billion in terms of operating cash flows. For the full year, you're crossing over the $100 billion mark on operating cash flows. And Google basically uses all of that right back into their business in one way or another, or rather hands it to you, the shareholder. And so on their full year cash flows, basically spent $27 billion in investing activities. That's in the purchase of property, plant, marketable securities, basically investing back into the business. And then the remaining $61 billion they're using to repurchase their common stock. Not really issuing too much debt. They're basically sort of just refinancing the debt they already have on their balance sheet. They obviously don't pay out a dividend. And so Google is spending basically 100% of their operating cash flows either investing back into themselves or repurchasing their common stock. You see in this most recent quarter, they bought back close to $16 billion. And then for the full year, bought close to $60 billion. Even in 2022, they were nearly at $60 billion in terms of their buyback. And so Google, again, continuing to utilize their cash just to buy back their common stock. Not sure if it's the most effective at the current level, considering it was at all-time highs. But considering we have nearly a 6% drop, certainly Google can utilize that buyback just a little bit better. Now, onto the chart, the stock is dropping nearly 6%, as we said, down to $144 in the after hours. This was on a slightly short-term uptrend back in October of 2023. It kind of bottomed out at close to $120 a share and then made this pretty rapid uptrend up to $150 a share. Now is seeing that rejection back down to the support close to $140. I think this one is likely to come back in the range of $130 to call it $140 in this channel, where it kind of has been for a while. Back in August of 2023, it sort of traded in this range. I think Google can be expected to come back in this range, channel sideways for a little bit. I think this is your area to accumulate shares in Google. Really, anytime it comes closer to $130 a share, I think you can pull the trigger and inch into shares of Google. This one still is an uptrend, still looking fabulous from an operating cash flow, from a revenue perspective, although the growth on their advertising business does seem a bit concerning, at least according to investors, or pardon me, analysts. I think there's nothing to really worry about. This company will absolutely, in my opinion, figure it out. They are seeing already the benefits of their investments in AI. Notably, they are a bit slow to it, certainly compared to a Microsoft. I think Microsoft did beat them out to their innovations in AI, but we certainly have to see how the Gemini era looks, and really, are they able to layer on AI onto their platforms, onto search, onto YouTube ads, similar to how Microsoft is layering AI into all parts of the tech stack. If Google really is able to implement AI throughout advertising, throughout search, and then basically take a page from Meta's playbook to become more efficient, to become more lean, and just run their business a couple of percentage points more efficiently, yeah, this will fare well for the stock and likely continue to propel it to new all-time highs. That was my take on Google. A quick analysis, but I think a fairly stable company. I think any major pullbacks in Google south of really 140, closer to 130, can be looked to be bought. Let me know your thoughts on Google in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.